All right, let's get into it. The crypto market right now feels like a classic tug of war. You've got these two massive forces pulling in completely opposite directions. And pretty much everyone is stuck in the middle trying to figure out which side is going to win.
And this really is the million-dollar question, isn't it? We're seeing Bitcoin fight, trying so hard to get some upward momentum. But is this the beginning of a real breakout, or is it about to slam into a brick wall? That's what we're going to unpack today.
So, the main event right now is this battle for Bitcoin. You can see it trying to stage a comeback, but wow, it is meeting some seriously heavy resistance. It's like it's pushing against a ceiling that just doesn't want to budge.
Now, if you just glance at the numbers, you might think, hey, things are looking up. The CoinDesk 20, a pretty broad market index, is up over 1%. But that little bit of green is hiding the real story, which is a ton of tension and uncertainty just below the surface.
Okay, so let's start with the good news. Let's look at the bull case. Because despite all this resistance, there are some solid reasons why a lot of traders are feeling pretty optimistic right now.
So, what's got everyone so hopeful? Well, you've got the usual buzz on social media for sure, but the real meat on the bone here is the macro stuff. Everyone's got their eyes glued to the Federal Reserve, hoping for an interest rate cut. The thinking is cheaper money means more cash flowing into assets like crypto. Some people are even whispering about a potential melt-up if the Fed gets really aggressive with easing.
All right, but for every one of those green shoots of hope, there seems to be a big, flashing red warning sign. And these aren't just gut feelings. We're talking about some core financial indicators that are screaming, be careful.
Now, to get what's happening here, you need to understand something called a risk proxy. It's a fancy term, but the idea is simple. Think of it like the market's mood ring. When investors are feeling brave and want to take risks, they pile into stuff like high-yield corporate bonds. When they're scared, they sell them. So watching these ETFs gives us a great read on the overall vibe of the market.
And here's where things get dicey for the bulls. That mood ring we just talked about, it's not looking too good. Those key risk proxies are showing weakness. On top of that, the US dollar is getting stronger, which usually puts the brakes on Bitcoin. And if you look at the options market, more and more traders are buying puts, which are basically bets that the price is going to go down.
And it's not just us saying it. Here's a quote from the folks at London Crypto Club. They're pointing out that stress in the traditional banking system and less available cash, liquidity, are acting like a giant anchor on Bitcoin, holding it back and making the whole situation riskier. And you can see this caution playing out in real time. Just look at the money flows. In a single day, over $100 million flowed out of the spot Bitcoin ETFs. That's a pretty clear signal that the big money, the institutional players, are getting a little nervous and are moving to the sidelines.
But here is where the story gets really interesting, because while Bitcoin is stuck in this tug of war, other parts of the crypto world are completely ignoring it and just doing their own thing. Not everyone is waiting around for Bitcoin to make a decision.
I mean, check this out, the HYPE token. While Bitcoin is struggling to move even 1%, HYPE just casually rockets up over 11% in 24 hours. This shows you that there are still pockets of serious momentum if you know where to look.
And get this, it's not just people buying the token on the spot market. Open interest in HYPE futures jumped 17%. What that means in plain English is that traders are making big, leveraged bets that this rally has legs. They're putting serious money behind the idea that HYPE is going to keep climbing.
And it's not just a one-off token either. Take a look at the fundamentals of a major decentralized exchange like Jupiter. Their third quarter growth is just wow. Trading volume exploded by 71%. Total value locked is up over 40%. These are signs of a genuinely healthy, growing ecosystem that's generating real revenue and real activity, completely independent of Bitcoin's price action.
Okay, so Bitcoin is stuck, but altcoins are running. What are you supposed to actually pay attention to figure out where this market is headed next?
It really all boils down to this one central conflict. On one side, you have the bulls, pinning their hopes on the Fed to cut rates and unleash a wave of new cash. On the other side, you have the bears, pointing to a strong dollar and a shaky traditional market as major headwinds. Whichever of these two forces wins out is probably going to decide the market's direction.
So to cut through all the noise, here are 3 very specific things to keep on your dashboard. 1, watch the dollar index. Is it getting stronger or weaker? 2, keep an eye on those risk proxies we talked about, like HYG. And 3, follow the money. Watch those ETF fund flows. These 3 things will give you your best clues about which side is winning this tug of war.
Which brings us to our final thought. In a market that's giving you this many mixed signals, The signal that you choose to listen to, whether it's the macro picture, the technical charts, or the action in specific ecosystems, that choice is ultimately going to define your entire strategy. So which one matters most to you?